All right. Good morning, traders. How are y'all doing today? I am joining you live for our Saturday session. This is a time that I'm going to go over what I am watching for potential swing trades. Give me 1 second. I just need to adjust my auto. All right. I think I got it now. Good morning. Good morning. Good morning. Mike, we can go over that. Remind me at the end, okay? Um, and I will go over that ACDC setup with you. All right. If you can do me a favor, if you're watching, go ahead and hit the like button. Takes a couple seconds, helps me out as far as getting this video seen by traders that might be looking for potential swing trades going into next week. So I use a website called koifin.com to gauge where the overall strength is in the market. Number one, we are in a bullish trend. Even last week in the shorter time frames, such as a 4-hour chart, we had broken down and things looked like it was heading further to the downside. But at the beginning of last week, we rallied, and it was basically 5 days to the upside with some great opportunities to catch 100-point days. I hope you did well trading last week back to the upside. Now, is the bottom put in for the rest of the year? I have no idea, and I'm not going to sit here and speculate. What I do want to do, though, is tell you, looking at Koifin, where the strength in the market is from a year to date aspect, this quarter, this month, or should we say November? Yeah, this month it's still November, and last week, so the last 5 days. Atop of that list, without a doubt, is gold and gold miners. They continue to be at the top from a yearly look back, looking back the last 3 months, looking back this quarter so far, the month of November and last week. Gold and gold miners, GDX, continues to be on top of the list. Metals and mining also strong from a yearly look back, as well as a 3-month look back. And then they popped back up over the last 5 days. So last week's trading sessions, metals and mining came back into play. Now, if I look at just the October and November itself, it doesn't make the top five, but overall, it is still really strong with some strength last week, bringing it back up to number two as far as strength goes across the market. SMH is also on the list. Broadcom, of course, has earnings soon. Uh, NVIDIA has been lagging behind its peers as of late, so that's interesting in itself. But semiconductors back on the list for everything except the month of November. And then healthcare is also showing relative strength as far as the last 3 months, the last 2 months, and the last month. So I got some healthcare names on my list. And then jets, the airline sector, over the last 2 months last month and last week also showing some strength. So if you look at the left-hand side of my screen, you will see my watch list starting with Alcoa here and working its way all the way down to Warner Brothers. These are the names that I chose to focus on for potential swing trades into next week. I will go over each of these charts telling you where I am looking for an entry, where my stop would be, as well as where I'm looking to trim, sorry, and then my final target for swing trades. So let's start with Alcoa. Alcoa has a buy zone at or around $37. A stop would be a daily candle close below 35.12. That gives me a risk of just under $2. The first target up here is 41.44. That is about $4 of a reward to first target. And then the ultimate target 44.70 to 46.78. Now, once a name enters my buy zone, I set an alert right before the buy zone just to give me some time when that alert goes off. If I am busy teaching in the trendy room or I am away from the screens, when that alert goes off, I just jot it down that I need to take a look during the less hectic time of the market. So, not necessarily during the market open that first hour, but after that, take a look and see where, for in this case, Alcoa is at in relationship to my buy zone. On a trade like Alcoa, if I were targeting 44.70 and it has a monthly ATR of about $7.50, you can see that that target would be about $7.50, meaning I need to give myself at least a month to expiration. And if I want extra time, which I believe extra time, as long as it's not too much time, is the better way to go. So I could buy either the December monthlies or the January monthly expiration there. I like to trade at the money, or if I go out of the money due to cost per contract, then I'm going to only go out of the money to my first target. So in this case, if I were going out of the money, which Alcoa is very affordable, I wouldn't need to, but I would choose like the $40 calls, even though I would be getting in here near 37, since my first target is 41, I could choose the $40 calls. Okay, so that's how I choose to trade. I don't trade spreads. I trade from a cash account, meaning I am either buying calls in a buy zone or puts in a sell zone. So that is my trade plan for Alcoa. American Airlines, I mentioned that the JETS ETF is in a showing relative strength. So I have a few airline stocks here on the list. Jets has a lower weekly edge. This is a trendy indicator that we use to find to automatically populate buy and sell zones on our charts. And the lower weekly edge for next week is right here at about $13 on American Airlines. So I went ahead and boxed in that zone and also using some Fibonacci to find a buy zone, and that gives me 1321 to 1274. This is a risk of just under 50 cents, and the first target is over 50 cents. And then obviously the ultimate target up here at 1512, 1593, and 1650. Much better risk to reward if price can go all the way to the ultimate target. Again, considering ATR of $2.70, if I'm down here, that means I need at least a month to 2 months to expiration, choosing the December or January monthly expiration. A stop would be a daily candle close below 1274. This is the first target, and then these are the next targets above. Up next is Apple. I do have a couple of the Mag 7 names on here, and I'm choosing to focus on the outperforming Mag 7 names. That means Apple and Google. And a VGO, but it's not Mag 7 technically. So for Apple, my buy zone is down here near 272 by 270. That's a risk of a couple of dollars. And the first reward is more, way more than a couple of dollars. Now, if we create an inside and down here, I would have a closer target to trim at, but for now, my targets are 278.63, 280.38, and the all-time high on a 4-hour chart, which is 285. So my buy zone 272 by 270, and these are the targets above. For Apple, you don't have to have as much time to expiration because its monthly ATR is $24. The weekly ATR is about 11 and a half. And you can see if I'm buying down here at 272 all the way to the all-time high, that's about $13. That means price could get there in a week or 2 weeks. So I wouldn't need to go as far out for expiration on this trade for Apple. All right, daily candle close below 270 would be my stop, and my targets are above, as you can see. As far as AEM, this is a gold mining name, trading in GDX. I would need a pullback on AEM back here to 167.89 by 161.80. That's going to be where the lower weekly edge is on this name and the most recent inside and up candlestick structure. I am not a buyer at up here at highs. I like to wait for a pullback, and so my risk on this is going to be about $6.50, a little more than that. And then if I wanted to use where basically price stalled yesterday, that's going to be about 175, and that's again about a 1-for-1 risk to reward. This is a gap fill up here at 178.48 on this rally back at the beginning or towards the middle of November. It could not quite fill that gap. So if we get a quick pullback here in AEM, I would target the 175, then the gap fill, then 185 and 187.50. ALLY, I found this name on a social sentiment watch list. Sometimes I will look, especially if we're in a bullish trending market, at some social sentiment names, and ALLY, ally, showed up there. As far as where price is at right now, I'm not looking to go long up here at the highs. It is coming into resistance. So I would wait for that pullback. Now, There is the daily cloud setting right here at some key EMAs as well. So that pullback could be only to 39.87, even though my buy zone is down here at 38.67. My first alert is going to go here at 39.87. Doesn't mean that I'm going to necessarily buy there, but I want to be alerted that price is at the daily trendy cloud as well as the 50 SMA and the 21 SMA, and make the assessment if I want to start not going full allocation here at this level, but start a position here and then look to add to full allocation on a further pullback down to 38.67 by 37.18. If the price pulls back to this area, my first trim is going to be right here at or around $41. That's going to give me at least a 1-for-1 risk to reward. If it only pulls back to 39.87, I'm using 41.82 as my first target, then 43, and ultimately 43.85 by 44.83. If I look at the ATR on Ally, I can see that in a month it moves about $5.50. If I'm getting in here, here is the ultimate target. I would need at least a month. So again, I would be choosing December monthlies or January monthlies on this name. Let's look at Broadcom. Broadcom is on fire. And again, Broadcom does report earnings. Let me get that earning date for you so that you're aware, on December the 11th. So not next week, but the following week. My buy zone on Broadcom is going to be based on Fibonacci's, and that would be 386.24 to 371.75. We continue to make higher highs on new all-time highs. That is now 403. And then some extension targets above would be targets to the upside on Broadcom, but this would be my buy zone on a pullback on Broadcom. Now let's look at Barrick Gold. Another way to play the gold miners. Lower weekly edges down here near 37.88. The inside and up, or the buy zone, the candlestick structure I like to use for the buy zone is down here at 37.50 by 34.97. This is where I would be looking to go long. That first trim is going to come here at the upper weekly edge, 41.21, and then some higher targets, 44.73, 47.82, and 49.90. Again, looking at the ATR, it moves about $4 a month. So I would need January expiration to get to these upper targets here. Because of that, I don't want to just buy December. I would need to buy out to at least January to target these upper targets right here. Citibank financials, they're not at the top of the list, but they are performing well. I am currently in one contract on Bank of America and it is doing great. But on a pullback, Citibank is also looking good. It's right at resistance here. So maybe we get a pullback in Citibank. My zone to buy would be down here at 99.26 by 95.83. And the target would be back up here at 103.40 to 105.59. that for as far as how far out to go in time, it moves about $9 a month. That means I need a month or two, right? So again, December or January monthly expiring contracts here for this name. I've got about $3.40 of risk, and my target is just over 4 or $6 target to the upside for reward. So that would be my plan on Citibank. It's in a very nice squeeze. If you trade John Carter's TTM squeeze, you can see that this name is in a very nice squeeze and trying to get that histogram to go positive. So that would be my play on Citibank. Now let's look at Cleveland Cliffs. This thing has some room to run if it can get back above these areas of resistance. So the buy zone is going to be down here near 1125 by 990 here on CLF. Targets to the upside. And this name definitely has a much smaller ATR, $3.25 to the upside. That means I'm buying out to January or February expiring options on this name to play it to 1727 by 1810. And with a name like this, because the higher time frames are bearish, I would buy more time rather than less time. So we're definitely looking at February or March expiring options here on Cleveland Clift. Next up is Cisco. Cisco is another outperforming tech name. My buy zone has not changed from last week. I did not get my entry here due to confirmation and waiting for that confirmation. And really, I'm okay with that because it did nothing but consolidate here right at this zone. So the zone stays the same, the target stays the same. First target 78.96, then $82, and the buy zone 75.89 by 73.88. So $2 of risk, $3 to first target for the reward, and then about $6 for the upper edge of this zone. Now, if you're trading more than a couple of contracts, you can use the stopping wick here at $80 as another target to the upside. Now I'm going to look at CVS. CVS, I have some equity in this that I can't remember if it was, I think it was last year that I started the equity position in the trendy room, but it's doing fine. I've gotten some trims on it, which is great. So I banked some profits on CVS. I like the buy zone down here at 78.35 to 76.23. That's about $2 of risk and a little over $2 to the first target. But ultimately, I would like to see CVS up here at 82.5 by $85. So for a trade, sorry, for a trade like this with a $9 to $10 monthly ATR, I need about a month of a month to expiration here. but I think I would rather choose January than the December, just for to have a little more time rather than less time here on CVS. And because the zone has some trendy edges inside of it, rather than going full allocation at the top, I would rather scale in. So doing a starter position at the top and then waiting for the confirmation if there is continued weakness in this buy zone. But a stop would be a daily candle close below 76.23, and this is the target 82.50 to 85.15. Delta Airlines is next. Just another airline name here. Delta had one, two, three, four very nice days to the upside last week, and Fridays was just a consolidating day. I would be have to wait for some weakness in this name down to 59.07 by 55.27, playing it back up to 63.82, 66.13, and then 67.85 by $70. Looking at the ATR of $9, I would need at least a month, so probably going December or January expirations on this trade. Now, the zone is wider than just a couple of dollars. So buying more time and scaling in is my preference in this scenario. So buying some extra time out to January and looking at half allocation at the top of the zone, because airlines can be volatile for sure. So that's how I would choose to play delta here. Now let's look at DuPont. DuPont's bullish across the board, a very nice rounding bottom here on the daily chart. A pullback to 38.41 to 37.05 would be my buy zone. 40.33 is a first target, and then 41.96 to 42.82. That target to the upside's about $4.50 away, and the monthly ATR is $4. That means I would be looking at the January expiration on this name. So if we get a slight pullback to the buy zone, that's where I would be looking to enter the trade. And then the stop would be a daily candle close below 37.05. The risk to reward for the sell zone is about $4.50. The risk here is $1.50, so it has a good risk to reward. I like that name. GDX is the ETF for gold miners, and it's doing great and it looks wonderful. I have an alert set on GDX. Down at the lower weekly edge, and then the first target at the upper weekly edge. If we get a pullback to the lower weekly edge, I could look to just play the gold miners ETF rather than some of these individual names that I have on my chart. So that's why this is on my watch list, is potentially to play this ETF. Now, 8509 is an all-time high, so I drew some Fibonacci extensions for some potential targets above if we take out the all-time high. All right, so that would be the trade plan there. I have a risk of about $4.50. The reward is about $8. to the upside at that first target, and then who knows from there. But I like the risk to reward, uh, but I would definitely be waiting for a pullback. Now, the pullback might only come to a 78.65, and then my first target would be 82.19. Well, that risk to reward isn't worth it for me to take the trade, but if you like a quicker buy on this, I would say 78.65 is the area that I would use to get long on an aggressive approach on a pullback to there. GILD, this is a healthcare name. It has been consolidating, building up energy in here. My buy zone is 124.5 by 122.30. That's a risk of about $2, little over $2, $2 and some change, and the reward is $3 and some change. Then above there, these are Fibonacci extension targets because 128.70 is the all-time high. So a daily candle close below 122.30 would be my stop. This thing, it's building energy. It is in a well-developed squeeze. It's been squeezing since the end of October, building up some energy. Now, there's no guarantee that the squeeze will fire to the upside. It could fire to the downside. Then I would be wrong on the trade and I would just exit if we got a daily candle close below my stop. No big deal. But given the overall strength in the healthcare sector, my bias would be to play it to the upside. Up next is GLD gold. I just have an alert and a zone around the lower weekly edge and the first target, the upper weekly edge. That's going to be 375.82. And the first target, upper weekly edge, is 386.54. Then using Fibonacci from measuring this high to this low, I get these additional targets back up to all-time high here. All right. Let's see. Up next is Google. Google, of course, just been on fire since the 14th of November, making new all-time highs, looking great. My buy zone though is 311.80 by 306.40. This is a combination of the weekly edge as well as some Fibonacci's here. That's about $5.40 of risk buying this zone here, and the reward is about $10.50, and then the all-time high would be the next target. Above there, I would have to draw Fibonacci extensions. If I just run the Fibonacci extension from this area of consolidation here, and then we got going and run it like this. I like to choose between the 236 and the 382, then the 618, and finally 100% of that move would be there, and those would give me the Fibonacci extension targets to the upside. Now, I have an equity position that we built this year in the trendy room on this name, and I'm down to just a not very many shares here as I have trimmed on it the way up. But for just to be transparent, I do have a position on Google equity in the trendy room from levels that we found at the end of last year. Speaking of that, I think it would be cool to do a session here on YouTube where towards the end of this month, going over some potential buy areas for s- companies that I would like to build equity positions in 2026. So, towards the end of December, look for a session geared around that here on my YouTube channel. Okay, guys? All right, let's look at Warrior Metal. This is my trade plan for this name, HCC. This is a metal mining. Name my buy zone 76.33 to 71.80. You have inside and up candlestick structure. The up or sorry, lower weekly edge and upper yearly edge is inside of this zone. These are my targets to the upside again, using some Fibonacci to find those targets. This thing it does move. Okay. It moves 11 about $11 a month, which is pretty big for a small stock like this. It trades trading at $78. $11 a month is a pretty sizable move. So in a month, we could be up at all-time highs again if the trend continues back to the upside. But just given the fact that the zone is pretty wide, I would look to start the position towards the top of the zone and add to the position towards the bottom of the zone. If we pull deeper back into this zone, I would set my first target at about 79 and a half from this area of the zone. I'll just have to wait and see. If I get an entry here at the top of this zone, then I can have an alert at 79 and a half, but really targeting 81. But have an alert there and watch price action as it comes into 79.41. If I feel like it is showing signs such as a topping wick or something like that, like this candle here, then I'll go ahead and trim my position at 79.41. But if it hits 79.41 and continues with momentum, I will be patient and wait for 81 for the first target there. All right. Now let's look at Hecla. Now, notice there's a lot of names on here in the metals and mining and in gold miners. I would not load my book up with all of these names. If I'm in one or two positions and some of the other ones set up later, I wouldn't take those trades at that point. All right, so I have them all on here. I have alerts. I will watch for my entries. But after I'm in one or two positions, anything else that sets up, I will pass on because I have been burnt in the past by being overly exposed to one area of the market, and that's no fun at all, guys. So my buy zone on Hecla is about $2 wide. That means my risk is about $2. I do wait for candle closes here, and I can do that because my max risk is an amount that if it went to zero, it's not going to wreck my account and not going to wreck me emotionally. All right, so about $2 of risk. About $3.30 or 40 cents. No, it is 30 cents of reward to this first target. Let me actually move this up here a little. This would be the first target, 1640 by 1695. Then the next target, 1802, and finally 1925 to 2150. All right. Up next, another healthcare name, J&J. I am using Fibonacci to find a buy zone here on J&J. That's going to be 202.50 by 199. That's about $2.50 of risk, and the reward is just under $5. Then these are extension targets above for J and J. All right. Stop is always a daily candle close below my buy zone. Okay. KSS, this is Kohl's. Very nice. I believe this was an earnings report. My buy zone is based on Fibonacci. I'm using the 38.2, the 50, and the 618 for this trade. That makes my risk about $2.20. The first reward is about a 1-for-1. It's $2.34. And then these targets to the upside on Kohl's. So I would be waiting for a quick pullback to this buy zone and then take the trade. Now, this is another one that doesn't have extremely high ATR. It moves about $5 to $5.50. So I would need at least a month here, but I would prefer erring on the side of caution and buying 2 months. So choosing January expiration there on Kohl's. Stop would be a daily candle close below 1922, and if you want to scale in, I would scale in starting the position here at 2141, waiting for confirmation to add to the position on a pullback to the 50 fib from the gap move to the upside, which is 2032, and then a candle close below 1922, which is the golden Fibonacci level of this move, would be a stop for me. Now let's look at Southwest Airlines, another JETS name on this trade. This is a weekly zone here, 3302, 3115. I would be waiting for a pullback to here. That is about $1.87 of risk there, and my initial reward is just over $2, making it better than a 1-for-1, and the ultimate reward 36.60 and 37.96. A daily candle close below 31.15 would be my stop. And as far as expiration goes on Southwest, looking at about a $5 monthly move, I would choose January expiration here. All right, let's look at Merck. I am using the lower weekly edge for Merck as well as some Fibonacci key areas. A buy zone 100.25 by 96.75. That's about $3.50, and the initial reward is just short of $5, and then ultimately 109.08 by 111.58. Now Merck, this is a lower yearly edge, so I could buy more time to potentially play this up into these other edges, the higher time frame edges. But for now, I'm just going to stick to trading it off of the daily chart and these Fibonacci and trendy edges, looking for support at 100.25 by 98.87. This is where I want to buy. This would be my stop, and these are the targets above. Now, Newmont Mining. Buy zone 84.15 by 81.34. Daily candle close below here, and I would be stopped out. Targets 90.88, 93.43, 96.04, and 98.58. Pfizer is a healthcare name that has really, really struggled since 2021. There is nothing bullish about it from a higher time frame look back. But with the rally in healthcare names and the fact that it has a daily squeeze and a weekly squeeze, it grabbed my attention. So I would actually be looking to play this here from the weekly chart and buying time to expiration on a pullback into here, scaling into the trade and targeting these levels. At this level, I want to at least have one runner that I could potentially carry that one runner if Pfizer gets moving and makes some of these higher targets above. All right. So that's what I'm looking at Pfizer. I would be buying extra time because I would like to play it back up to about $31 if it continues being bullish here. I like the rounding bottom on the weekly. I have to respect the fact that on this daily chart, I have some clear resistance here, and the yearly edge mid is at about 2805. So this would be a target if I was only wanting to play this name for a month or two. This would be a target if I was wanting to play this name for out to say June of 2026. All right. Weekly candle close below 23.91 and I would be out. All right. Warner Brothers is up next. Let's take a look at Warner Brothers. This thing, it just looks good. It's moving well. The EMAs are all positively stacked. They all have a nice trajectory to the upside. I've got an alert here and I'm going to move it up just a tad to that lower weekly edge. It's in a squeeze. It is just starting the squeeze though. All right, so a nice rounding bottom here on the daily, a pullback to the lower weekly edge, and this buy zone is where I would like to get long. Then trimming and inside of this zone, if you would like other targets, one thing that we do in the trendy room is you can use the quadrant lines and divide this zone into quarters to get some more targets inside of this zone if you wish. I'll just mark 50% here, the middle of that zone. But overall, I am bullish Warner Brothers. I need a pullback to go long from, and then I'm wanting to play it up into 24.53, 26, and 27 and a half. All right. All right, so I made it through my list. Now I am open to answering your questions, or if you have a name that you'd like me to look at to give you buy and sell zones for, I'm happy to do that. You can just put them in the chat. And Mike, you wanted to talk about the ACDC setups. For those of you not in the trendy room, maybe you've never heard, well, you might have heard of ACDC because they were an awesome band, but maybe you've never heard of the ACDC strategy for trading. And Mike had a question about MES and MNQ. So the ACDC strategy says that when prices push above these orange arrows here, that is a trigger long to play an ACDC bull with the first trim coming at the green arrows right here. All right. The target to the upside is the upper monthly edge. Now, when we wake up on Monday to trade, we're going to have a new upper monthly edge. This is November's upper monthly edge, and price did not make it back here for Mike's ACDC trade. It didn't make it here before the end of the month. And Mike's question is, do I change the upper monthly edge, which the December upper monthly edge is now right here? And my answer to that question is this, Mike. If I've ran out of time in the month, I leave my target in place. And I see in the chat you said you bought at the lower weekly edge, which was great. It's right down here, and it was a beautiful move. Even if you trimmed at the decel and the accelerator arrows there, or just use the upper weekly edge, right, to trim at. You are right at December's upper monthly edge. I don't know when you last trimmed, but Mike, what you could do is what I like to do is run your Fibonacci of this move. And if you're just in some runner contracts and you've made nice profits on your way up, you can use key Fibonacci levels and look at this level here, 67.83. It's lining up with this inside and up candlestick structure here. So you could just raise your stop, right? Just raise your stop to 67.83. But I would leave my original target still in place here, even though technically November is over and this upper monthly edge is now down here right where price is at. I would still leave my target in place and see how it goes to the upper monthly edge. And the same would be true for MNQ as well, Mike. All right. So let me get to, did that answer your question, Mike? And let me get to the chat and see, Deepak, can we take a look at SPX setup for next week? You bet. SPX for next week. So trades that I'm going to be in for just a week, I prefer looking at 4-hour charts. Nice, very nice, Mike. I love it. Up over 2K. That's awesome. I like to look at the 4-hour chart, Deepak, if I'm only planning to be in a trade for that 1 week, right? Darn it. I think I just duplicated that. All right, so let me check my fibs, or I'll measure them out for you. I'm going from this low to the most recent high. I'm marking the bull channel, right? Because we are in a bullish trend here. This week was nice and bullish, right? So the bull channel is a target to the downside from this sell zone. Now, SPX moved into a 4-hour sell zone. And you have several formations in here. Here's one, and here's one. Okay, so this is a sell zone in here. Just like I told Mike I leave that upper monthly edge on, here's the upper monthly edge for SPX. So in this sell zone, you can expect selling pressure. on a pullback, if you're looking for a potential place to go long before the lower weekly edge down here, then I'm going to tell you that that area would be the bull channel, right? 67.74-ish, 73.79, but you know, let me remove this. All right, 67.74 by 67.25 would be the aggressive, more aggressive type buy the dip here. And the more conservative would be the golden profit area. There's also inside and up candlestick structure here. The lower weekly edge is here. The 618 is here. There's a lot going on at 66.86 by 66.30. This is the zone that if I were being conservative that I would use because of the confluence of all those things that I don't have in this zone. I do have the 4-hour cloud as confluence, and when the weekly edge mid prints next week, it's probably going to be in this zone. But I like this zone better. And as you know, Deepak, I am a more conservative trader waiting for pullbacks and not as aggressive. So take that into account when I give you what my buy zone would be. But it's going to be somewhere down here near 6,700 for me. But I do understand with this bullish price action last week that the pullback might only come to 66.74, this 50-point range, 75 to 25. All right. Then the upper weekly edge, if we do get a pullback, becomes resistance at 68.25. But right now, with price in a sell zone, I'm not looking to go long from a sell zone for sure. I would need a pullback to here or here and then go along to the upside. All right? Awesome. Um, I'm looking at the chat now. A buy and sell zone are on the top and bottom, but in the middle of those is where we identify what is chop. Exactly, Rom. So let me just give you an example of Apple when it just sat and chopped for what felt like forever before it finally broke out. It had a very clear chop zone. And the reason why is because you had a very clear sell zone right here. Okay, I'm just going to leave them gray. Um, so here was the sell zone, inside and down candlestick structure. Here was the buy zone, inside and up candlestick structure. So what happened with, um, and it was really right about there. What happened with Apple is it got stuck between a buy and a sell zone that were close together. Okay. And when that happens, we get chop. You can play choppy conditions, but what you want to do is you want to be a buyer at the lower end and taking your profits at the upper end. And then if you want to short something that is extremely bullish, then you can go short at the upper end, playing it back to the lower end. So anything between these zones, when you have zones that are right near each other, there's 10 points here between the buy and the sell. And you're going to chop here for a while, which is what Apple did. Now it's gotten up into this sell zone. And what makes it different? Look at the times that it got up into it before, which was here, the middle of November. And again, here, the beginning of this week, and we got a little pullback. We got a pretty significant pullback here. What makes this time different with Apple is this trendy indicator, this buy arrow right here. We did not have that when Apple came up right here. We had one right there, and you got the continuation that brought it up into the zone. This time you're getting a buy arrow with price in the zone. That is where we're looking for continued momentum inside of a zone. Well, it depends, right, Rom? So on Apple, you're asking about the bullish golden pocket. Okay. So if I'm looking at price action on Apple, and say, so what we're looking for is a stair stepping up, especially on a 4-hour chart. And you can see that it came down, made this low, and then it would get a good move, and then it would consolidate, and then a good move, and then it consolidated, and then a good move, and then it consolidated, right? So that little trend, if you run your fibs from here to here, there was your golden profit area right there. All right, the golden pocket. Golden profit's what Trendy John calls it. All right, but there's your golden pocket area. But some people, right, might look at this and say, yeah, but I would measure these fibs from this area. Some would say I'd measure them from here. It really depends on the amount of time you're going to be in the trade. I would not use a Fibonacci range to trade from for a trade I'm going to be in for 2 weeks. I wouldn't use the range of 3 months for a trade I'm going to be in for 2 weeks. Does that make sense? I would use a month for a trade that I'm going to be in for 2 weeks, but I wouldn't use 3 months. If you're using 3 months, then it it's got to be a trade that I'm going to be in for a month or two. If I'm considering Fibonacci levels and I'm using 3 months worth of trend, then you can see that it puts the golden pocket all the way down here. If it's a trade, which on a 4-hour chart, this is a trade I'm going to be in for a week, maybe 4 weeks, right? But more than likely a week or two, I'm going to use that trend. Does that make sense? Ah, thank you, Rom. No problem. All right. Any other questions that I can answer for you or any other names you'd like to take a look at? By the way, if you haven't hit the like button, make sure and do that. And if you're not subscribed to the channel, subscribe. I produce videos every week, and those videos come out on Mondays, by the way. So if you're subscribed to the channel and set for notifications, you'll get the notification when the videos upload. I do a lot of emphasis on trading mindset, having the right mindset to trade. Um, what's between our ears is our biggest enemy in trading. Things like fear and greed and FOMO and revenge trading and all of those things are our biggest enemies. And I like to help people, help traders have tools to keep those emotions at bay at least. All right. So make sure you've liked the video, make sure you're subscribed, and I don't see any other questions or requests. So I'm going to go ahead and end the live stream here. If you're watching this on replay and you have a question, you can put it in the comments. As always, I look forward to being seeing you in the Trendy Trading Room. If you're not a part of the Trendy Trading Room, there's a link that you can join us in the Trendy Room. My trading partner, Trendy Jon, and I trade live Monday through Friday. We are in the room educating and taking trades basically all day long. So be sure and check us out in the Trendy Room. And until next week, I hope y'all have a wonderful weekend, a great week of trading next week, and I will see you live again next Saturday. Y'all have a blessed day.